Well, good morning, everyone. Sorry about the delay there. Old timers kicking in, I guess. I forgot to open up the room. Oh, man. But I did remember to load my charts earlier today. So we got a 50-50 kind of day going on here. All right, let's get the screen share happening. Yesterday, in spite of waiting on the FOMC, was a big old nothing burger. Here, this is the daily. We'll take a look at the intraday. Here, let's do 5 minutes, good enough. Let's look at a 5 minute. So here was yesterday's session. Very, very constipated. Even after the minutes were released, yeah, there was a little bit of a rally, and all that was reversed before the market closed. So, you say, what do we make of that? I'm not sure. I was hoping the FOMC release would give us some sort of direction. But right now, no. So same kind of setup, same kind of consolidation. And traders are going to look at these consolidation periods differently. Some will be seeing a bull flag and expect a bullish break. Others will be seeing a sideways trading range. That's kind of where I'm leaning. But until we get some sort of directionality to the day, it's going to be tough slogging again. You can see the market taking over pretty much from where we left off yesterday's close, so no gaps or anything to speak of today. All right, let's get that out of the way. At the moment, we're a little bit more bullish, and we're getting a number one signal, and we're getting a follow-up number three signal. Now, because of the sideways nature of the market, I may look at trying to catch a little early momentum on this trade. Oh, look at that. They just go up a few ticks and then scramble lower. Let's see if we can get some buyers interested in that breakout. There we go. Get above that last little swing. There we are. Well, we're kissing that last little swing. There we go. Now I can get my trade to break even. Oh, you stinkers. I was a couple of ticks late getting into my order, and well, that cost me a break. Well, it didn't cost me, but it tagged me out at break even-ish. See if we get another hard edge bounce attempt. There it is. All right. We'll try it again. Oh. Get my trade up there to break even. Yay. Okay, that time they were a little more cooperative, giving me the much needed follow through. And we're getting close here to the primary resistance zone. That's that blue line, which I believe is awfully close with yesterday's highs. By the way, the primary resistance and primary support lines don't identify the highs and the lows of the previous day, but sometimes they just happen to line up that way. All right, let's put that away for now. All right, good thing I took profit on target there, as we're getting the big reverse now. Still mildly bullish overall, I think, especially if you take the overnight into account. Although it is not unusual to see a reverse from the overnight session to start the day. I guess there was a number 2 signal here we could have capitalized on. A nice little bounce off of the primary resistance line. Excuse me. Oh, the early morning sneeze. Always fumbling for the mute button. Here we go again with trend. Since, this high here could very well be a test of the extreme, I'll look to buy it, but only if we can get above that high. Or if we get a decent second push on this number 1 signal. My concern is that we're going to get a bit of a sideways wedge going on. You always need to see how the market is reacting to the last swing point, right? In this case, the swing point was higher, so no real surprise the market went higher. Now the swing point is lower. So I guess if we wanted, we could look to short it and try to take it down to the bottom end, see if the market's going to reverse, make that big elongated type pennant. This is definitely a little bit more of an aggressive type trade. Oh, there's that little bounce off of the hard edge. I think I would have to say, though, that the overall momentum today is a little bit more bullish looking. Okay, well, we've got that 2-3-2 type setup. So the counter trend, the width trend, the counter trend. If it breaks down, there is a good chance the market will, well, at the very least, I think, attempt to test this trend line, maybe even get down here toward these lows. The Bollinger Suite starting to come into sync now, so that's, oh, spoke too soon. It got pushed back. Oh dear, now we got the width trend again. I'm going to give it, no, I was going to give it another tick and set my stops above this swing high, but unfortunately, looks like I was a little bit late on that. Well, we've got a late filter entry signal brewing here in the Falcon. And so what we're looking at is we've got a filter out of sync, waiting for it to come back into sync. The trend line not changing color. We've got the warning dot. Okay, so I'm just anticipating the signal's going to print. Okay, there it prints. Filter now in sync. Trend line hasn't changed color. It's actually a nice flat little trend line, which is what we like to see with a late filter entry. Now, this may be a little bit early, folks. If you're looking to mirror a trade, this one, you know, we're still kind of sideways. All right, let's see what they can do as we get back. There we go. Did you see that hop through the primary zone? Let me clean this up and I'll explain. So did you see how quickly the market went up a few ticks after breaching this high? That's because we stopped a lot of the small, well, not a lot, but a few of the small traders out of their selling attempts. A seller's exit order is a buy order, and that helps push the market a little bit higher. Well, I'm very close to calling this a trend. Oh, see, I scared them off. Oh, there we go. Must be a report just came out, or perhaps somebody's been letting the president post on Twitter again. Nice move. That's definitely trend territory now, folks. I'm going to throw my just in case order to buy above the top here. Again, maybe a little premature, but the thing with a trend is the market is going to be inclined to stay with trend. I got to get my stop order in. I guess I should have been a little bit faster setting everything up here. I would have banked a little profit on that trade, but oh well. I'll have to do it like this. Problem with trending markets is stop placement. Let me get this out of the way to explain. The direction is not the issue here, right? We can be fairly certain the market will try to continue higher today. Maybe not at this point, but somewhere throughout the day, it will continue to push higher. Stop placement, ideally 2 swings back. Well, here is swing 1. You could count that as swing 2. That's a big stop by anybody's standards. And yet, to try to get by with, anything less, you're decreasing the odds that the trade will work out for you. So ideally, you keep a larger stop to begin with, and then you adjust your stop as the trade progresses. Okay, so I'm going to roll here somewhere around the hard edge. And if we can take out that little swing high, I'm going to take my trade to break even. Technically, we have 2 swings. If you wanted to say, well, they're both in the same price level, they only count as 1, I would not argue with you. There is a certain amount of logic to that. Come on, get above that high now. You can do it. Okay, I'm taking the trade to break even. No, don't flinch yet. Stinkers. They want to go higher, but they did not. Scoundrels. Oh, sure. Now keep rallying, you stinkers. We've got ourselves a little number 3 signal here, which we could do a second push entry on. Whoa, baby. They tagged a lot of, trapped a lot of traders there again. I guess the better setup would have been just to park an order there. We would have hit the profit objective, but now they took their foot off the gas there for a sec. All right, another little hard edge bounce. Let's see if we can see a little giddy up. One more bar. Come on, you can do it. There we go. Oh, don't you dare. Don't you don't you dare. Oh, that's annoying. Oh well. Better than a loss. Loads of volatility today. See, just getting tagged on the swings before they finally rally up. I'll admit it can be tough to keep your nerve in a market like that. And now that it's exploded like this to the upside, I may have to wait until a pullback to try to get in. The danger is if I buy in now, I risk buying in at the top. Aspen's asking, Eric, can you show me your break-even specs on the Raptor 2? Well, because I'm using Ninja 8, I manually take the trade to break even, as you see. I tend to have a break-even roll when we're about 3/4 of the way to the profit target. So if I've got a 20-tick target, I'm usually looking to roll my stops anytime I'm, 17 ticks to the target, 15 to 17 ticks. With the trade manager, of course, you can pre-program that. I'll show you guys on the next trade. Yeah, Ron, you got a point. Ron says maybe you should go to 17 ticks for a profit target, like good old what's his name does. Yes, you may have a point. We'll see if Mark's in the room here this morning. Good old what's his name? Oh, no, he was here the other day, but he's not here this morning. Mark, one of the DTS owners, if those of you unfamiliar with the name, Mark has become a very proficient trader. And one of the things he's noticed is that sometimes the market will back off that 20 tick profit target. So he started taking profit at 17 ticks. And you know what, Ron, you may be right. That might be the smart thing to do. Now, to adjust your profit targets on your trade calculator, you can go into your indicators, find your trade calculator down here in your assortment. These are the ticks on limit, ticks on stop is how far from the current price do you want your limit order or stop order to print? I find that if I allow 5 ticks, I can kind of get a good idea. Where the hash mark will print. Minimum contracts, maximum contracts, you can cap out your contract size, initial stops, all that. Okay, here's targets. Target 1, we're all in, all out. Let's see about that. Let's see if that's going to work any better today. As my screen locks up. Come on, there we go. All right, so now the next trade we take, let's say we're going to do this number 3 signal here. You can see our target a little bit closer. Oh, there we, let's do the number 2 signal. So now we've got an $85 profit target instead of a $100 profit target. Well, let's get that out of the way. And I'm just trying to show you something here, folks. The better course of action is probably to buy, not sell. Well, you get the idea. I thought I'd be able to show you how I rolled the stops as well, but we'll have to do that on the next trade. Well, the sellers have a little bit of room to move here on the short side, but it is a buyer's market today, no doubt about that. Although I say that and I look here at the hawk, already bearish, the falcon already bearish, even the raptor's struggling. Now we're kind of stuck here at the moment. We got that little bit of a sideways range going on, right? Now, when in doubt, go with trend. So you could just leave your, hey, next time the market rallies higher order in play. Look at this. We are in full on scalp mode now for the next hour. We'll see whether that holds true. Actually, I'm going to come back to that if it looks like the market's going to rally. If we're in scalp mode, well, that's probably a good reason to tighten our profit target too, isn't it? All right, let's see what they do now that they're back to the hard edge. Oh, we got ourselves a bit of a trend change / late filter entry signal here in the Falcon. We're going to get an early cloud crossover here on the Raptor. See if we can print that signal. Come on, you guys. So the cloud's not fully crossed, but you can see we're starting to cross. We dipped below the hard edge. This now the pullback. So the next signal will be a #1 signal of sorts. It will be the early cloud crossover signal. So I got my warning dots. I've got my order. Get my exit order out of the way because these orders, unlike the Trade Manager version on Ninja 7, these are live once you put them on your chart. I should still be looking to buy. The trend is up. Okay, the cloud's still crossing. Still don't have my signal. I just have warning dots so far. But a signal should print somewhere around here. All right. They're taking a little bit too long. I'm going to scrub that. We'll wait for a little bit of a better setup, perhaps. Okay, here we go. That's a little better. And let me get my order in and I shall explain. All right, so we saw another rally up, actually 2 attempts to rally up. This one right here, and then the one right beside it, neither of which went higher. So if they don't go higher, there's a reasonable expectation they're going to try to head lower. Okay, now when I'm in a trade here with the trade calculator, I can take my exit order and I can hover it down here. And visually, when I get, there we go, about 3/4 of the way to the profit target, I can click it down. So my live order was still up here, but I can hover a stop loss order. Oh no, now they're flinching at 17 ticks. All right, who's telling them what I'm doing? But that's how you can get ready to take your trade to break even. And then visually, when the market's about 3/4 of the way to your profit objective, you can roll your stops down. Although I guess now that I'm at 17 ticks, I have to wait until we're about 90% of the way to the profit target, don't I? Okay, a very interesting little range going on now. This sideways, well, it doesn't show up so well there, but all this sidewaysness. Okay, now we're going to get the proper number one signal to short. And I've got the warning dot. I can anticipate where the signal's going to print. Exit order should be up here to start. Come on. Come on, you guys and girls, get down below that low. Uh-oh. Shoot. All right, well, I don't reverse often, but I will reverse on this position. This should have gone lower. It really should have. So if the sellers don't have enough going on here, the buyers are just going to take them out to the woodshed. And that should cause a bit of a rally, maybe even way up here. Actually, the way I should do it is like 2 separate orders. There you go. Hold the highs. Wow. Okay, well, they tagged me out, and we'll see here in a... Okay, let's see if they got what it takes now. I'm trying to give them a little bit of room here to get to the bigger profit target. I have hit my swing target, by the way, which was 5 points. The better stop for this, by the way, is back here. Actually, let's do it that way. The way you roll your stops when you're trying to go for a bigger profit target is when and if the market breaches the next swing high. You roll to the last swing low. So if the market swings here now, hopefully, and goes up above this high, then I can roll my stops to break even. Until then, I'm kind of on hold. Well, I guess being in scalp mode is a little problematic. As the market's making all these swings higher and lower. When you're trying to go for a bigger profit target, patience is paramount, and I admit it's much easier said than done. So here you can see why we tend to keep our stops 2 swings back. Not that necessarily this is going to save me in this trade, but had I kept my stop 1 swing back, well, the market easily broke through that. 2 swings back, I still have a bit of a chance. Okay, well, we're still trying to sort things out here. The market maybe with a little more of a bearish flavor creeping in. No, not yet. So we're stuck around this hard edge, and you can see the market really, really flat here for the last half hour. I guess I should have just grabbed my profit. All right, let's 58. And I'm going to squeeze the trade at this point. While it's, very impressive when you can run out a trade and, capture a big move higher or lower, like one of these are, they're great if you're in on them. Your bread and butter trades, you can see it's much easier to get in, get your profit, and get out. It's not always an easy thing to do to hang on that long, especially since the market is lacking follow through. Now, please don't think I'm feel like I'm borderline over trading, but that was a successful trade, even though it did not work out for me there. But the fact that the buyers are not going higher really, well, you know what? We could go back here to the eagle and we can kind of bracket. We find our little sideways trading range, which is like this. We've had our breakout, that's up here. So we have our just in case order to buy. This now is the retest. This is the retest failing. We could actually bracket the market this way. We have a little bit of a rule of three signal as well. And let's see, 47, 37, half. Yeah, the Falcon's working a trend change signal. And we were almost ready to push back to the highs, it seemed. I will stay with them a little bit longer, but what happened to all that momentum we were seeing? There we go. Still bouncing back and forth, still within this sideways trading range of sorts. Well, it's near the bottom of the hour. We should see something going on. Ron asks, how many people do you typically have in the room? It varies, of course. Usually somewhere between 20 and 40. While we're waiting on the market here to do its thing, a reminder again, I'm out of town on Monday. No trading room on Monday. Yeah, that's right, Aspen. It's Canadian Thanksgiving on Monday. And a happy Thanksgiving to you too. Well, what's going on here now? Things really getting quiet. All right, I'm going to cancel the order. Just because we're still stuck within the sideways trading range, we didn't see the market break out lower. still capped on the top end. So you could draw the trading range like this, wait for the next breakout and retest. Okay, we're making another bit of a move lower, maybe. All right, I'll entertain a sell signal. Even though we are very sideways, in my experience, if the market is struggling, it's more inclined to go down than up. There's an expression, you constantly have to feed a bull market, but you don't need to do anything to a bear market. It's almost like it will just fall under its own weight. No, they're not doing anything. All right, gang. They're fairly constipated here at the moment, so I think we'll just let them sort things out. We'll close up the room here for today. If you are going to hang out and trade, well, the best plan is to let the market break out. Once it breaks out and begins that retest, you know where you can short it from. Then when you see that retest, you know where you can buy it from. Likewise up here. If you do that, there's a very good chance that you will be profitable on the trade. Problem is, you're going to have to wait the market out, because right now, so long as it's within here, it's a bit of a crapshoot. It's going to look like it wants to go higher, and then it will reverse and go a little bit lower, enough to tag you out, and vice versa. It will look like it wants to go lower, bring you in, and then tag you out going the other way. So you have to be very careful so long as the market is within that sideways trading range. All right, gang. We'll do this all again tomorrow. We'll see you then. Bye for now.